Welcome to the Real Estate Investing Club. This is the place everyday real estate investors gather to share their best stories, biggest insights, and favorite tactics to grow a portfolio of cash flowing properties in today's market. Here's your host, Gabe Peterson.
All right. Welcome back to another episode of the Real Estate Investing Club. It is the last weekend in July. Man, summer is just flying by. It is crazy. Crazy to think it's the last weekend in July. There's going to be, I was in Costco yesterday and they're already putting out Halloween decorations. I'm just like, what the heck is going on, you guys? You're going way too fast. So today's going to be a good episode. We got Vessi Kapoulian with us from DBA Capital Group. Vessi is an expert in multifamily down there in Florida, Georgia, and Tennessee markets. So Vessi, thank you very much for hopping on the show.
Glad to be here, Gabe. Thank you.
Absolutely. I told you right before we get on here, we like to start with stories. So why don't you take us to the beginning of your story? How'd you get started in real estate?
Absolutely. Happy to share that. I will say really the very beginning started back in Bulgaria, Eastern Europe, when I was growing up behind the Iron Curtain. And I would say at that time, really the seed of real estate was planted in me, because when people talked about investments, they talked about real estate. And it's the ability to own your home, potentially a second property, mostly for equity building purposes, not so much as cash flow. So that concept was there, but the seed didn't quite germinate until 2017.
So
when
real quick, I'm curious.
Yeah.
I don't really know too much about like the USSR and all the countries that were within that block.
Yeah.
Did you have private ownership of property where you can use it as an investment, or was that, I thought that wasn't quite part of the system that they had going there?
Yeah, no, you could actually rent it out, but it's not like it would cash flow a ton. So when I say investments, it's one ability for people to purchase their own home, which was a big deal, a huge deal for many people. And then potentially own a second property, like a village home. Again, mostly for equity building, wealth accumulation. I'm not talking major wealth, just modest wealth.
Gotcha. Okay.
And some people rent their properties as well, but it's not a ton of income, it's some income. So nothing to the scale of what you see here in the US.
Yeah, that makes sense. So sorry, I jumped into your story. You were talking, you were in Bulgaria, got the seed planted. What happened next?
Yeah, so eventually my dream was always to come to the US to study. So I studied hard, earned a full scholarship, and was admitted to university in Arkansas, packed my 2 suitcases and arrived. And that was in 1998, so about 25 years ago. And this is home now. I decided to stay, but at that time I took the more traditional path of going to school, getting good grades, eventually getting my graduate degree, joining a company, and climbing that corporate ladder, because I that's what I thought the path of success looks like. And along the way, there were clues. I didn't quite pick them up at the same time, but I'm sure glad that I did. Things like the Enron scandal that happened, where people lost all of their 401ks. Then we went through the 08-09 crisis. And at that time, I was already in the lending space. So there were a lot of good lessons learned, not only about businesses, but also individuals who, again, lost their jobs and their retirement savings. And then my own employer went through a couple of restructures along the way. And I lost a lot of my colleagues in that restructure. And that's really when that was the tipping point, because I thought, well, I'm extremely lucky. I could be next. I'm not any smarter. If anything, it probably means I'm getting paid less. So at that time, I set on a journey of, well, I don't want to be that person who's 65 with no retirement. And I thought, what could I do? Well, I'll do what I knew best, is buy a little home and rent it out. And that will be my tiny little way to diversify away from the stock market. Living in California, that was challenging because to buy cash flowing properties here requires quite a bit of equity. And on top of that, the business laws, the landlord laws are not as friendly. So that naturally pushed me out of state. Scary moment, but I'm so glad I made that first step because that investment worked out well, which then opened the path for me to buy more properties, single family homes over time. And I think that's when the light bulb went on. Namely, wow, this is not just a small little retirement nest egg to diversify away from the stock market volatility. This can actually be a full-time venture. And that's when I decided to look into multifamily. Why? Because for me, it was a natural transition where I could apply my skills from asset managing my residential portfolio, as well as my underwriting skills, because I've been a commercial lender now for 15 years. So I could apply that knowledge as well as I transition into the commercial multifamily space. And from there, took action in meeting people, potential partners, underwriting, 200, 300 plus deals to find the one, and happy to share that dream is now a reality and have made that transition and looking to grow and scale from here and help other people diversify their portfolios and build wealth.
Nice, man. I love your story. It sounds like you really went through it to get to where you are today. I'm curious, why did you choose Arkansas as I mean, you're in Bulgaria, you chose the United States, you're going to go study there. Why did you choose Arkansas as the state to study in?
Yeah, so I had a couple of options. First of all, they gave me a full scholarship, and that was important for me because I don't come from a rich family. Frankly, if it wasn't for the scholarship, I would not have been able to afford to come to the U.S. But secondly, at that time, there is a Bulgarian professor who was and still is living in the United States that I consulted with, and he said, of all these options, if my daughter was choosing, this is the school I would choose. And
which school was it?
The University of Arkansas in Fayetteville. So it's
okay.
Arkansas.
Cool.
Yeah. So
and how old were you when you came to the US?
I was 18, 19, basically right after high school.
Wow.
And that was a whole other story, pretty scary story in my part, but I won't digress.
yeah, no worries. I always have a lot of respect for people who come over. I'm sure you didn't speak English, as fluently as obviously native English speakers. And so people who come over to, from a foreign country to the United States, start a life and become successful in whatever career they choose. I have a lot of respect for you guys. It takes a lot of hard work. And I'm sure it was scary when you were 18 getting on that plane over to the US. Before we continue on with today's guest, I want to tell you guys about a community I'm launching on School to help investors like yourself grow your own portfolio. In this community, you'll get access to all the docs I use, all the systems I've built, everything I've used to grow my own portfolio, as well as instructions and guidance on how to get out there and find great deals, how to finance those deals, and then how to manage them for great returns. Since we're just launching it, the price will be set at a measly $20 per month, and whatever price you join at is the price you'll have for life. We will be increasing the price as the group grows, so if you're at all interested in growing your portfolio along other investors, now is the time to join. I will put the link somewhere in the bio or on our podcast website at therealestateinvestingclub.com, so if you are interested, head on over there. With that said, let's get back to the podcast.
Absolutely. Lots of transitions, but extraordinary things usually lie on the other side of comfort. And I think it's important to take calculated risk, right? I'm not suggesting even when for that first property, yes, it was scary, but I did my research on the area, the market, the team, and took calculated risk and really happy that I did that. So some of the most amazing moments in my life have come through going through some of those maybe either transition periods or difficult periods, and taking that leap of faith in God, trusting God first, but also taking that leap of faith in myself and that next step.
Yeah, you just did that. The first step once you make a decision is always the hardest because it's just terrifying to let go of what you know and step into the unknown. But if you just keep going forward, eventually you're going to make it. And it sounds like the second, big transition you made was you decided to invest outside of where you lived. How did you decide on the market when you did decide to invest outside of California?
Yeah. So the first property I purchased was in Memphis, Tennessee. And how I came across that was really through a local meetup here in Los Angeles. That was sharing a lot of their meetings online. And there was one particular person who would speak very frequently, and he would post his contact information. He talked about investing out of state, Tennessee. He said, if you have questions, call me. So one day I called him and I asked, hey, do you know someone who would sell properties in Tennessee? And he happened to be one of those people. Memphis in particular, I already had some familiarity with because I had visited a few times while I was living in Arkansas. And beyond that, I did my research right on not only on the metropolitan area, but also on the submarket where some of the properties were located that were offered to me for purchase. And so, yes, it was scary. Yes, it was unknown, but I did my homework and really I was motivated to take action. And it's that fear that was driving me. I don't want to wake up 20 years from now and think I should have started this earlier, or gosh, my retirement portfolio is gone. I'm out of a job. What do I do now? That fear of regret at that particular moment was really pushing me to take action. So I didn't necessarily have my eyes and mindset on Tennessee from that very first moment, but it was this decision to take that first step, take action, and of course, do my proper diligence along the way.
Yeah. Yeah. And it's so important to kind of take these steps as they're presented to you. It sounds like you met somebody who was in the area and you're like, hey, here's an opportunity. I'm going to take it. I'm going to take some action. And it got you into a good place. So,
yes.
Since those first few houses, you've gotten into multifamily. And it sounds like you guys are spread across Florida, Georgia, and Tennessee. Tell me a little bit about that transition. How did you go from single family and what was like your first multifamily deal? How'd you raise the capital? All that kind of stuff.
Absolutely. So the very first step when I decided to make that transition was to educate myself. And yes, I had a lot of experience, as I mentioned previously, just asset managing my residential portfolio. And then, of course, the experience on the lender side. But I really wanted to educate myself and understand what happens on the operator side of the equation, and that pushed me to consider a mastermind and mentorship and coaching program, because a lot of the people who have been successful in that space were talking about it. And I figured I will follow in the footsteps of success. So I went down a rabbit hole of researching different coaching programs. And that was important to me, not only from the aspect of having a structured learning approach, but also having accountability by virtue of working with a coach and finding my tribe, finding my potential partners, people who are motivated to do well, who are like-minded, because that's also really important. At the end of the day, that's a people's business. So I'm joining that mastermind to structure my education, have accountability, and find my future partners. And from there, it was rolling up my sleeves and getting to work. Specifically, what I decided to focus on as markets are the properties, the areas where I was already in. So Florida and Tennessee. In Florida in particular, because I didn't want to be spread too thin. And in terms of skill set, I focused on adding value to other people through underwriting and data analysis. And so through that group in particular, there was a deal that was presented to me. One of the GPs reached out to me because he needed a second set of eyes on the underwriting. And over time, we had built relationship and I had helped him on underwrite numerous deals. And the numbers look great. So I checked all of my boxes in terms of the people, the market, the data. The only exception was it wasn't in Florida. But everything else lined up. So I decided, again, take that leap of faith, and really happy that I was able to join in and add value to that team, and also my now investors, because that property has been performing incredibly well. And that's also another reason why I'm doing it, is to have an impact, positive impact, not only for myself, but those around me. And it's been a very rewarding experience.
Nice. I love to hear that. And yeah, it is so important to have mentorships, masterminds, just a group of like-minded people around you doing the same thing that you're doing, and that you trust and respect, because that really helps. I mean, I know from my own experience, if I was just lone wolfing it, going out, just doing it on my own, first of all, I'd make a lot more mistakes. And second of all, there would just be a lot, the motivation wouldn't be there. We get so much from who we're working with. So it sounds like you got a lot of that from your mastermind group. Before we go into the final section of the podcast, we are running down the clock, but I wanted to ask about your opinions on the current market. People are saying that, I've heard all these different kinds of predictions of what the market's going to do. So I honestly don't know heads or tails what actually is going to happen. So what is your take on it? Especially for multifamily, where do you see it going? Where do you see the market in general going? And what is your plans going forward?
Absolutely. We're definitely threading in very frothy waters right now, but that is also not a time to be scared, but to see that as a time of great opportunity to purchase amazing assets at more reasonable prices, because valuations were definitely inflated over the past couple of years. So specifically for myself as well as my team, we remain net buyers. We're not jumping after any and every property. So I think it's extremely important to stay true to the underwriting principles, market selection principles, and then operating the property and focusing on asset management. And as long as you stick to these fundamentals, if you find a property where the numbers work with the right team of people, I would take action. And that has been my approach since. Now, admittedly, because of where the market is, deal flow has reduced substantially from last year, and there still seems to be a pretty wide gap between buyers and sellers. However, I'm hoping that with some of the loan maturities that are coming due from these 3-year or short-term bridge loans that were put in place in the past couple of years, I'm hoping that at some point of time, right, these operators will need to take action. So I'm hoping that leads to better or more opportunities for great properties on the market.
Yeah, we're seeing the same thing in self-storage, which is what I focus on, is that there's a huge difference between, buyer expectations and seller expectations, but they're slowly coming in line. So that's good. You mentioned, you're really good at underwriting. What is, I guess we can use cap rate as the metric to look at. So what is the cap rate that you guys are aiming for when you go in, and what are you looking for when you stabilize?
Yes. So as far as cap rate, really, that's only one of the data points that we look at. So at a minimum going in, I would like to be at positive leverage, meaning for the cap rate to exceed my debt cost.
Debt service, yeah.
Yeah.
Do you have a DSCR that you guys have a minimum of, or does it? Do you just want it to be cash flowing?
We wanted, well, the lender has a minimum of 125, and as an operator, we usually like to have some cushion above and beyond that. So I would say probably 1.5. But the ultimate debt service target would be driven by the lender. I would say probably the metric that I like better than cap rates would be the yield on cost, because the cap rate captures the purchase price. The yield on cost captures the purchase price and CapEx and other expenses. So that's probably one we look at more closely. And again, making sure that's positive relative to the cost of debt or the cost of capital.
That's interesting. I've always when I calculate my own cap rates, I just put the CapEx in there. I didn't know there was another word for that second metric when you add the CapEx into it. Yield on cost, right on. Yeah. All right. So that wraps up the initial section here. It's time to jump into the quick question round. Are you ready?
I'm ready.
Let's do it. It starts with books or any form of education. Give me 2 recommendations, one for general life wisdom, one for real estate specific.
All right. So, general life wisdom, one of my favorite books outside of the Bible is Think and Grow Rich by Napoleon Hill. Unlike the name suggests, it's really more about mindset and living a rich, meaningful life. I reread this book at least once a year. And then real estate wise, specifically for multifamily and syndication, I would say the best ever apartment syndication book by Joe Fairless. It's literally, you could treat it as a textbook. It gives you step-by-step guides on how to get started and prosper.
Nice. I love it. All right. Next question is for your younger self. So let's go back to the Vessi who was just stepping off of the airplane in Arkansas. Go to her, look her in the eye, give her one piece of advice moving forward.
I wish I had started earlier in real estate, and I wish I had been previewed to the entrepreneurial path. I'm very grateful for all the skills and knowledge, everything I've learned in corporate America, but there's more than one way to be successful, more than one way to make positive impact. So I wish I had started sooner investing and had that seed germinate a little bit faster. But I don't want to live a life of regret. So I've taken action, pivoted, and looking forward to the future.
There you go. And whoever out there is listening and you're keeping track of the number of guests who come on here and say they wish they started earlier, that's another notch for that bucket. I swear to God, it's like 90% of the people who come on say they wish they started earlier. So if you guys are out there, you're listening and you've been thinking about getting invested, you've been thinking about getting into real estate, take this as a sign. Go out there, just buy your first property. Everybody wishes they started earlier. So start now. Now's the best time to start. All right, that moves us to the next question. And this is about the US. It's a big place, a lot of opportunity out there. Give me the single city, the single metro you're most excited about investing in today.
Most excited today. Wow, I have a couple of markets actually in mind, but today I would say Savannah, Georgia would be one of the places that I'm looking into.
Yeah, Savannah is a hot market. There's a lot of people interested in that area. A lot of just Georgia in general.
Yes.
It sounds like most people are pretty excited about that. All right, next question is about finding deals. You mentioned earlier that you do you underwrite 200 to 300 deals before closing on one, which is great to hear. So what's your favorite way of finding those deals?
So specifically for one of the markets that I focus on, Florida, it's really through broker relationships, but really it boils down to adding value to others as well. So the deals in Georgia that I mentioned earlier, I didn't source those. Those were sourced by my partners who are locally there and boots on the ground. But if I was to choose one, I would say broker relationships. Specifically in my market, 92% of the deals are sourced through brokers. So I choose to spend my time on the 92% of the market.
Yeah, that makes sense. And I think that's probably pretty similar across all the markets in the US, especially the bigger deals. Brokers,
right.
Great way to go, which is why relationships are so important, not just because they bring you stuff, but because it's fun. I mean, why else would we do a relationship or do real estate if we couldn't make good relationships? All right, that leads us to the last question. This is for the listeners. I'm sure people want to reach out, get in contact with you, learn a little bit more about what you guys do, and possibly invest in one of your deals. So what is the best way for people to reach out and say hi?
The easiest way to connect with me is through my website, dbacapitalgroup.com. D as in dream, B as in believe, A as in achieve. My phone number, email, and link to my direct calendar are there. And people can also download a complimentary copy of my digital book, The Busy Professional's Quick Guide to Investing in Multifamily, so they can become a better educated and more empowered investors. All
right. I love it. So I will put that link in the show notes. If y'all want to reach out to Vessi, just click a little more in the description. It'll pull down that full description, and in there you can find her links. All right, Vessi, that wraps it up. Thank you very much for hopping on the show.
Absolutely. Thank you so much for having me, Gabe. I really enjoyed it.
Absolutely. For everybody who's here with us today, Thank you guys for showing up. You are the reason we do this. So if you guys have any questions whatsoever, reach out to me, Gabe at therealestateinvestingclub.com. And if you guys want to support the show, all we ask is you give us a like, subscribe, share, all that jazz. Other than that, I hope you guys have a great week. Keep rocking real estate, and I look forward to seeing you on the next episode. All right, before I officially sign off, I have a quick announcement to make. If you're interested in becoming a passive investor in one of my deals, my own company, Kaizen Properties, is looking for capital partners for our upcoming projects. We invest in what are known as recession-resistant assets, mainly self-storage facilities, mobile home and RV parks, and industrial properties. If you're interested in investing and would like to learn a little bit more about my company, our investing criteria, and some of the previous projects we've done, go to the Real Estate Investing Club podcast at therealestateinvestingclub.com and scroll all the way down to the bottom of the page. Click on the Invest With Us button. That'll pop up the investor form. Fill that out, and we will reach back out to you as soon as we can. Or if you prefer a little bit more of a personal touch, you can reach out to me at Gabe at therealestateinvestingclub.com. So really, that is it. Again, it was a pleasure hanging out with you guys during this episode, and I look forward to seeing you on the next episode.